Eric Mother, Mother.com. I greet you in the love light of the one intelligent infinity for October 7th and 8th. Let's take a look here, and we are seeing the markets coming off the lows of the session where we were down almost a percentage point for the averages, and we can see we've come back from the lows, and more noticeably here we are seeing the VIX pulling back after almost touching and trading above 20 this week. And if we take a quick look at the cryptos, we can see Ethereum currently trading at about 1650 and BTC trading at 27985. Let's take a quick summary for the week. So this is where markets are gonna close just about here. We can see NASDAQ showing a nice gain for the week, and for the month currently up about 1.5. Dow is unchanged, and we can see Ethereum is down for the week. Let's take a look at those charts. Let's begin with the S&P 500. By the way, it's about 20 minutes again before the end of the session. Looking at the S&P 500 on the hourly, I want to show this because at the lows of the session, we could see that we had already formed this low going into yesterday because of this divergence here. So this was a logical area for those who time the market intraday to consider this an area for re-entry. So when we came to test these lows early in the session, this happened with another layer of improved RSI. So because the RSI was above 38.2, that was telling me at least to anticipate that if this holds, that there's going to be a very strong snapback move. And that is exactly what we are getting. Also, if we take a look at the MACDs, we can see at the lows of the session. So again, just understanding the MACDs, we make lower lows, MACD showing improvements at the lows. And then during this push here, you can see your MACDs were well above their divergence lows. In other words, the technicals were coiling for a recovery. Now taking a look at the S&P 500 hourly again, I'm going to draw a simple line connecting the tops as such, and you can see that coming into the close of the week, we can see we are headed exactly where we see the top side line. Also consider that this is also an area where if you take this area here where we come off that high, use that and draw your uniformity line. It's going to be something like that. So the blue line happens to connect with the black line. Let me draw it right there. And in fact, if you go backwards, something like that, you can see it gives you some meaningful areas where the chart did turn around and reverse. So for example, if you take a look at the previous here, this resistance below here, and then we were rejected here for the highs here of late July. So if the bulls are going to push the market beyond current levels into the new week, we need, or the bulls need, the market to clear these two lines so we can advance this recovery. Personally, my feeling at the moment, based on the data here, is these lows could hold for a while. But we shall see, because we have to take things moment by moment. Take a look at the NASDAQ. Remember, over the last couple of weeks, in fact, I would say over the last 3 weeks, I've been anticipating this reversal. It's taken a while. And for sure, if you consider the lows of the week, this market looked like it was headed straight down. But again, if you understand the technicals, the charts can confuse you intraday. But you can see by the end of the week, over the last 3 weeks, the market is higher, right? But it doesn't seem like that was going to be the case. Now, keep in mind what I've been talking about, simple lines. The NASDAQ, we can see here, if we consider where the RSI is trading, number one, we have good support around the 50, just like we did here for the lows there. And also conversely, just like we did here for the reversal downwards. So right now we are looking at the exact opposite, which is meaningful support around RSI 50 for the NASDAQ. So without knowing what the future brings, we have to hold our nose and anticipate a market that over time on the weekly is looking to come back and test the highs for 2023 and probably improve on those highs. Now, of course, also there's also another line that I had been drawing, and I'm going to draw here. So this line is the line I've been suggesting over the last couple of weeks. It's this line here. It's a simple line connecting the RSI lows, and this line net has not disappointed us, because we can see the market is responding to it even after threatening to break it. So you can see the weekly for the NASDAQ there confirming what we were looking at. Also on the MACD here, I can see that if you take a look at this MACD setting here, 8, 3, 8, 13 and 5, if this can hold above 0, that's also another sign that it failed to break down and is positive indication of intent to move higher. S&P 500 on the weekly, here we're going to see a little bit of a different variation of the same thing. What I'm going to do here is, for example, draw a line as such, and what this line is going to give us is a little bit of a breakout here, which is this movement. We use it for support here during those lows, and we are using it for support here. Also anticipate that if the S&P 500, whenever it moves above 50 on the weekly, expect that week, whenever it does move above 50, to be a good up week, closing at the weekly highs whenever that happens. Also, we can also consider the following line, which is a variation of the same thing in a sense, because if you consider this area here, actually it's this area here, during this action here of the lows, draw a line from here, and this is more or less my uniformity concept. Every time you hold this line, remember it's a weekly chart, it's gonna take weeks to play out. As long as that is holding the black and the blue line, this is indication that we should anticipate again a market that is stabilizing and looking to move higher. By the way, I should also qualify here and explain that visually that's the case, but if we come back and break these lows, these lines, be on the lookout. There's going to be more downside. Right now, what I've been saying here over the last couple of weeks is the market looks like it's breaking, but it has yet to break. This is the VIX Daily, and if I go back here, this simple line, we can capture this break point. We're going to take that information and draw a straight line from here, something like that. And you can see how this was used by the market for this reversal in October of last year. Here, reversal here in March. We tagged this twice in August, and we are doing almost a triple top here, late September, early October. So that's not the most convincing chart for the VIX. And in fact, if you move a little bit closer, this is now the 1 year. We can see that there was a breakout attempt here. So there was a daily closing high here and another daily closing high from this past week. So we were breaking out. Let me just draw that clearly. And in fact, to explain this, let me move to the 6 months daily. So there's this daily closing high, and that's at 1894. And so we tried to break out this week, but you can see ultimately we did reverse and we are below that breakout level. Now we've given a new breakout level here, which is the high for the week, and that daily closing high, which becomes the new breakout level to watch for the VIX, is at 19.78. So anything above 19.78 for the VIX is going to be encouraging for the VIX and something for the bears to be encouraged about. But if the VIX can't break out above 19.78, then this market is looking to put pressure downwards on the VIX, higher for the general market. Now, so we can see here that this breakout above 18.94, this breakout here has failed, completely failed. So this is looking more and more like the VIX wants to pull down. This is the VIX, and this is 3 years of weekly data. If I connect the tops of the RSI, you can see the market seems to be aware. And as long as this is offering resistance, then the VIX is not going higher, which means the market is going higher. Now, keep in mind that this is also suggesting that should we crack back below 50, expect a big down week for the VIX and for the market to have a strong up week. So this is just something to keep in mind, that if the VIX is rolling over and it drops below 50 on the weekly, expect a big down week. The only way the VIX can correct this situation is by the VIX coming back and taking out this topside line. So if the VIX can break out above this line, move above 19.78 on the daily, then the VIX could see a push higher. Right now, this is leaning towards more and more that the VIX wants to pull back week to week. On the monthly, so the Dow was closest to RSI 50 right now. Earlier in the week, let's say even as earlier this Friday morning, it was trading below 50 but has since recovered. So as long as the Dow can hold above 50, and especially if the Dow can turn positive for the month, then this could be a market that is on its way to a recovery move that could take weeks and months to play out. So the risk here, if you're bullish, is if the Dow drops below 50 on the monthly, this could really open the gates and push the markets lower. Above 50, and this market could see a nice run. And you can see evidence of this in late 2015, early 2016, late 2018. You can see the recovery in 2020 here, and also a recovery here off the lows of 2022. So what the bulls want the market to do here is to clear and hold above RSI 50 on the monthly for all the major averages. Take a look at TBT. We can see that this is classic example of what happens when an instrument is above our RSI 69.1. this is when there's a good momentum and sustained push to the upside. So as long as this instrument is holding above 69.1 on the weekly, we have to give it the benefit of the doubt. This is the weekly. Same thing can be said about the monthly. So the monthly is currently above 69.1, and what I said last weekend is be on the lookout, because if this was to correct and show us uniform activity back below RSI 69.1, rejection with uniform activity back below 69.1 would be similar to this period here, and that tends to be a short-term high, if not a major high. But let's understand that as long as the RSI is above 69.1, this thing could continue moving higher. And I'm going to remind you that we can use this monthly closing high here from 2018 as a gauge of the breakout success or failure. That level is at 38.17. So anything above this price is still a breakout of this TBT, which is short the bonds. And we also know that we can use that price to gauge failure. If it drops below that price, that's going to suggest that the general market is seeking higher prices if this is going to continue being one-for-one inverse the market's general trend. So I'm going to use the VT ETF, the World Stock ETF, to also generally cover emerging markets. So this is going to represent my views on EEM and instruments like EFA. And what I'm discussing here is something I discussed over the last couple of weeks. Nothing has changed really. And it is this line here. Simply put, we come off the lows here. Now this line is of importance down the road, because every time you hold this line, then you anticipate that this is suggesting that there's going to be a recovery. We recovered here, and we're in the process of recovering here. As long as this continues coiling higher, it's suggesting that markets globally are now looking to be favorable sideways to higher, unless it happens that we come and break this line. Since we haven't broken yet, even though we look like we are breaking here over the last 2 weeks, we haven't broken yet. So my suspicion here is the market was faking us before actually taking up its true trend, which is to grind it higher in the weeks and months ahead. Which brings me to the Nifty here. We can see, again, as I was talking about over the last couple of weeks, yes, it's off its highs, but you can see that if we take this line here, simple line, which is the prior highs, we break out here, and we can see the market did just close, but we can see turned into support, and here we haven't broken down. So it is stabilizing. Is it the best looking chart ever? No, but it's not breaking down in my opinion. In fact, if you take a look at the Nifty Daily, the line I was proposing last weekend seems to be holding. It's this line here. I can draw it this way. I can even take these lows here. At any rate, this is a well-defined area of the chart around RSI 38.2, and as long as this line is holding, we can anticipate that the Nifty is looking to be sideways to higher. And in fact, as long as it stays above the 50-day moving average, we can give it the benefit of the doubt. If we take a look at the four year weekly, I'm trying to say, for the Nifty Bank Nifty, it's a simple line here, going back to the lows of early 2020, connecting the lows here of 2022, lows of 2023. So this is suggesting that as long as we can hold above this line, that the Bank Nifty should stabilize and seek higher prices. And at the same time, since the line is well defined, should we break and stay below this line, that's going to indicate that markets are primed to go lower. So right now, I'm thinking that still we haven't broken, so we can give this the chance for a recovery and trying to take out the recent highs that it recorded here at about 46,000. Taking a look at the USD, so the dollar from a weekly perspective, last weekend I was talking about this area to be an area to watch. That it wouldn't surprise me that this becomes resistance, and we haven't cleared it and we haven't broken down below it. So we are still within, either breaking out or not breaking out, but at least either staying above this area and moving higher or turning into resistance. So we shall see. But after this nice move over the last couple of months, we might anticipate that the next meaningful direction here is for some resistance and a pullback for the dollar. Take a look at the uranium ETF URA. You can see it pulling back slightly. Now, of course, I did mention over the last couple of weeks that I wasn't very enthusiastic just because the RSI is not above 69.1, RSI is not moving to 3-year highs, and the MACD is not also moving to the MACDs, or neither of the MACDs are moving to 3-year highs. So I've talked about this on many occasions, at least a couple of occasions over the last few weekends, and still I remain not as enthusiastic about this space. But what could happen here as a possibility is maybe we do something like this, and the MACDs also get time to catch up. In other words, it could be setting the stage, possibly over time, could break out later. So that's a possibility. So what I'm going to do here is, I noticed that there were some uranium names that were trying to break out, and I'll give you two names. UEC is one of them. And again, here we can see the MACD is fine. So let me just spend a moment here. Here on this instrument or this stock, the MACD is at 3-year highs effectively. So this one's not at 3-year highs, but at least one of the MACD settings is at 3-year highs. That's all I need to see. The problem here is we don't have the MACD at 3-year highs or above 69.1, but it could be working on eventually exploding in price, so this RSI can move above 69.1. So what we can do here is, if this is an area of interest, we can watch a recent weekly closing high as a breakout level. If you want to try and see whether, or at least have some exposure, if it's an area of interest, 5.38 is the breakout level here. If it can break out above that price, maybe it could have a spike and eventually could have the uranium sector catching up. The other one is the leader in the space as far as I am concerned. And here, if you go to the 3-year monthly chart, you can see that it was already above 69.1 on the monthly. So this is good. And you can see that the MACDs are at 3-year high. So definitely in terms of minimum requirements, CCJ meets the minimum requirements. All it needs to do here is, after a couple of weeks of resting, now just needs to break out in price. So we go to the weekly and we can see that the weekly has a breakout level here. Let me confirm that price at 40. So this weekly closing high is at 40.30. So it needs a breakout above this price if it's gonna resume its recent move higher. So I would set an alert for this price. Anything above this would suggest that it is attempting to push higher and continue its recent run. So watch 40.30 on CCJ. Now taking a look at crude oil, let's take a look on the weekly. So WTIC, which had a big down week, coming off the lows, but then again, this is yesterday's price, so it's come off the lows. But remember, I was talking about this line here last weekend. I was talking about this break point here that was probably going to be tested, and you can see the market did respond to that this week. There you have it. So as long as this is showing resistance, we can see that crude oil is now on a pullback status. In fact, if you take a look at the USO monthly, so USO, which tracks crude oil, is giving us, let's see what it's giving us on the monthly. Let's go back about, let's go 13 years here. All right, so 13-year weekly, and I want to highlight this area here, which is off the highs of 2018, and draw a line from there. And what we see here is it gives us a good insight as to where it stalls back below this price here with uniform activity above it, and here again. So crude oil, in my opinion, has turned negative as long as it is showing resistance on this black line right here, which brings me now to XLE. Remember, I've been talking about for many weeks that XLE was breaking out in price, but there was just something, okay, not something, but there's a lot of stuff on the technicals that were not good. Price breakout, negative divergence here on the RSI, on the monthly, negative divergence, huge negative divergence here on the MACDs. So this is looking more and more like it is sideways to down, in my opinion. And also energy names could be looking to be sideways to lower, because the monthly price breakout for XLE is at the moment failing, and that is at 87.86, I believe, somewhere in that range. So as long as the monthly price breakout is failing with all these divergences on the RSI and MACD, I would say this is an area of the market that could have some downside price pressure. Now keep in mind, at the same time, there's this line that we've been using for many months, and what I've been saying that as long as we are above this line, we haven't broken down. So it could be pulling back, but until we break this line to the downside, and without a breakdown of this price, this is suggesting to me that this is a pullback that could find support, but it doesn't have momentum right now due to the failed price breakout on the monthly. GLD, and we can see here a classic inverse setup for the more divergent breakout. We had a flattening out 200-day moving average, and now we have this breakdown that took place here. That was when to get out or sell. And now we have the crossover between the 50 and the 200-day moving average here, which is a bearish crossover. And we ended the week with the RSI still below 30.9. So we could assume here that even if it recovers, it's going to have to make another low while the RSI finds a better floor. In other words, it could have, it's going to potentially, more than likely, have to form negative divergence or positive divergence. Lower prices, improved technicals, and for that to happen, it's going to take a couple days, couple weeks for that to play out. In other words, don't be surprised that GLD still has some price struggles and could be sideways to lower. Which brings me to Ethereum on the weekly, and I just want to highlight a couple things here. Number one, a simple line connecting the top side for Ethereum seems to be the struggle. Also, RSI 50 is showing rejection, hence why Ethereum is down about 4 to 5% for this week. Also, take a look at this line here where we break below 50, and again, if we use the uniformity concept, a concept by yours truly, if you don't mind me saying that, we can see that this is also suggesting that this is an area that if Ethereum is to go higher, must be clear to the upside, must move above both lines, the blue and the red line. Now that is the weekly. Taking a look at the monthly, we ended the month below 50, so don't be surprised, as I've been saying for Bitcoin here, which I'll mention in a little bit. But if Ethereum can retake RSI 50, expect there to be a strong push for cryptos on the month that Ethereum moves above RSI 50. Which brings me now to BTC. And BTC, as of this moment, is pushing its RSI above 50. So for this month, more and more, we are opening the door and the possibility that the cryptos are going to have a big up month. Which also means that now we can continue watching that 2023 monthly closing high, because should we clear that level at about 30,300, so 30k, if we can clear about this level, then the cryptos might have a push to the upside. But don't expect it to be like late 2017 or like 2020. Why? Because any current breakout is not going to meet the minimum requirements of the ultimate Muade breakout. It's just going to be, let's say, a move of this kind. So it's going to be until, let's say, 2024, which seems far away. But 2020, let's see here. So this is, let me just go conservative. 1, 2, 3. So I'm thinking late 2024 that we could get a 3-year RSI push on the monthly for BTC. But we shall see. Again, these types of moves are very rare because these minimum requirements have to be met. And right now we are not even close. Not even close. BTC on the weekly. And again here, if you go back to this line that I drew for many weeks, I drew this for all this period here. This is almost 4 or 5 weeks. I was talking about this area being support, potentially, or a breakdown area, but turned out to be support for BTC. And now we can draw the topside line similar to that of Ethereum. So you can see BTC stuck in this wedge. What the bulls want to see here is BTC clearing this topside RSI line and advancing prices higher. Obviously, what could be bearish here is resistance around this wedge, and we end up breaking below the RSI lows line on the weekly. That would mean lower prices. So right now, it's a wait and see game. I give the benefit of the doubt for the cryptos moving higher as long as BTC is pushing its RSI above 50 on the monthly, since it closed below 50 at the end of September. These are the closing numbers, I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.